Welcome to the Tuesday edition of the John McEntyre Money Show Live. I'm John McEntyre, and we almost had some technical difficulties. That's okay. We worked through them to make sure we could be here for you. Today is February the 4th, 2025. Yes, February the 4th. And I'm like, it seemed like it was just yesterday I was saying Happy New Year. So as you can tell, time is flying. Get on top of those financial goals, those resolutions, stick with them and make them happen because before you know it, it will be December and we'll be talking about Christmas. So it seems like, this Christmas 2023 was just like last year, like a couple of months ago. That was 2024. So time is flying. So let's stay on top of those resolutions and hopefully, I'll say it again, you're not one of those that gave up on January the 10th on National Quitters Day, or you didn't give up yesterday. You sticking with your resolutions and you're making them happen. You're actually being intentional and made them into dreams and broken them down into goals with those practical steps to make these financial dreams and goals happen. So another thing, I'm going to get it back on track. Yesterday, I talked about the tariffs because it was quite a few questions about the actual tariffs that will. One has gone in effect, I think, with China, and so I had to sort of get off track there to talk about that because that is important because tariffs and taxes run hand in hand. So we're going to see some costs go up here in America with certain goods that we import from China. So I had to, address that. I didn't want to brush it to the side like it's not important because it is important. But I was doing an actual series on, achieving financial success in 2025. I talked about creating, doing your net worth statement, creating a budget, your insurance and all of that. And so my next one was actually about home ownership, how important, home ownership is to financial success, especially building wealth. If you don't own a home and you're taking the steps forward, to achieve financial success, make home ownership one of your goals. A lot of people, today they say, that's old. Home ownership is outdated. As far as wealth building, it could be the farthest from the truth because home ownership means you own real estate, and real estate still is one of the greatest wealth builders in the world. Period. Mainly because there's no more land being made. So every piece of land is extremely unique. Every piece of land is just as unique as your fingerprint. And so when you're owning something that no one else is owning, unless it's partnership, joint ownership, things like that. But you're still owning something that's very unique, and it brings a lot of financial benefits and other benefits, and I'm going to cover those because most people, they will say, well, in some markets renting is cheaper than buying, and I agree with that. That is totally true. Renting is cheaper in some areas. The rents are lower, but overall history has shown that's like that's like a very small part of the market, very minute part of the market. And even then, the benefits of maybe paying a few dollars more to buy would still outweigh the renting. And I'm going to cover, when there is a time to rent, there is a time to rent, there is a time to buy. I'm not discounting that whatsoever. It's just that some people use it and they talk about it so much that they forget the actual benefits of home ownership and they lose some time. And I'll share the perfect story. I have quite a few stories, being in real estate for, since the late 90s, as a broker, and even longer than that, as an investor and everything. I have a lot of stories, good, not so good. But let's cover the actual benefits of it, and I'll share those stories. While renting, it may seem, some one of the biggest benefits people say is, well, it's not as stressful. Something breaks, I don't have to, have it fixed. I just call the landlord, things like that. That is true. That's why I say sometimes if you are an extremely busy person, you're new in your career, you're younger and everything, you're just starting out, it may not be the best idea to buy unless you're just in one of those markets that's just so cheap and is set to appreciate. Um, let's say Charlotte in the 90s, for instance, in mid to late 90s when I came here, it was set to boom, and it did it. I mean, it exploded. Like over a 10-year run. I mean, it was just climbing and climbing. It didn't do those crazy booms like New York, Las Vegas, places like that. But it did that steady appreciation, and it's still appreciating. So where some markets sort of lost value, Charlotte didn't exactly do that. What it did lose, it wasn't nothing compared to other markets. So, um, but renting, it can be less stressful to a point, and mainly because of flexibility. If you're renting, most of the time, if you've signed a rent agreement, you know, and it's for a year, or it could be month to month, or it could be 3 months, whatever you agree upon. Most of the time, all you give is, if you want to move, 30-day notice. There you go, you move, and you may even get your deposit back, which that rarely happens. I've seen it not happen more than I've seen it happen. Um, but you do have that flexibility. So if you are early in career, or single, or just married, it's just a couple, and you don't have a family yet, things like that, renting could be a benefit. Because then if you decide to start that family, and growing it and everything, then you can give the 30-day notice and find either a larger place, or you can actually go and buy. So that's where it is. But having said that, real estate is still the cornerstone of American wealth building. It is. And it's spilled over into other countries. That's how much of a benefit I've seen other areas. Like, for instance, early in my career, I saw Russia just boom. Real estate, people had a chance to start owning their own property. The wealth started growing. All of these, the I think it was the oil millionaire billionaires, tech millionaire billionaires, all of those came into play. And so that the Middle East, um I saw, met agents from those areas that were, just so busy they could keep up with all of the people wanting to buy. Parts of Africa, China, all around the world, just people just seeing the benefit. Canada seeing the benefit of, home ownership, and people wanting to own their part of, own their part of the world. Basically, is what they were saying. And so, long term, real estate has proven to be one of the number one best wealth builders. It hedges very well in the market. If the market is not doing well, real estate is an excellent hedge. I know a lot of people like to buy gold. In my opinion, gold is very good for hedging. And hedging means, balancing your losses, decreasing losses, minimizing your losses. Real estate does it just as well, probably better. In my opinion, it does it better because it doesn't respond like so sharply and so abruptly. It's quick. It may take a little while. It used to be real estate took months to respond to a bad market. Now, with the with technology and everything, it responds a little faster, but still slower than other investments out there. Gold, stocks, stocks today, it can be up today, down tomorrow. Real estate is not that way. It's pretty much steady because it's stable and it's tangible. That's one of the biggest benefits. It's tangible. You can actually see it. You buy a house, you can go see it. If you buy gold, physical gold, sure, you have it in your hands and everything. But a lot of them, you don't have as much control as you would over your own real estate. For instance, you buy a stock, sure. Stock ownership means you do own part part of a company. You own interest in a company, but you cannot go to a board meeting of, if you own stock in, say for instance, Dell or Microsoft. You can't go to the board meetings and tell those managers what to do. You just can't do it. They're like, okay, you own 5 or 6 stocks. You can't tell us what to do. So, you just throw that out the board. You're just part of a larger group of owners. That's what it is. And there is benefits there. Real estate, you own it. Your name is on it. You pretty much within the boundaries of law and zoning, things like that, you can pretty much do what you want to. The appreciation happens, it's yours. You rent it out, it's yours. You live in it, it's yours. It's the benefit of it. So that's the biggest part. I'm going to cover the 3 biggest financial. Then I'm going to cover another benefit where that most people don't think about, and study has shown this. It is probably one of the biggest benefits of home ownership. Well, number 1 is the power of equity. Basically, you're building wealth. You're building wealth with real estate every payment that you make, because equity is what you're paying for the place compared to what you owe. And so every time you make a payment, you're owning more and more of that property. Which means you're owing less and less. So the equity is increasing. And we all know what can be done with equity. Sometimes people use equity to make repairs, upgrade their home. They'll do the home equity line of credit, home equity loan. I'm not a huge fan of them, but for particular reasons, I'm not against it. And I've done shows on that talking about that. People have had questions about that. You can use it for that purposes. You get older, you may not have a lot of money in the bank. You may not have done very well in planning, but if you do have this house over here and it has $250,000, 300,000, and I mean I see this a lot, $300,000-400,000 worth of equity. You can pull some of that equity and make those those payments for long-term care, for instance, things like that. You have to have some other things in place, making sure, and it takes a lot of planning, but the money is there. A lot of people have used their, taken out pull some of their equity to do those types of things. So every time, but if you don't touch it, every time you make a payment, you're owning more and more of the property, you're increasing your equity. And that's the name of the game. That's one of them. With renting, you don't build equity. You're paying in, and you're paying to live there. You're getting yours, and that's just what you get. You pay in there, you pay to stay. Now the owner, the landlord, they're building equity. They're building wealth, because you're paying their mortgage for them. So they're the ones building wealth and getting the equity. So I would rather be on that side of the table. Like I say, there is a place for renting. You're young, things like that. That's okay. That's fine. But if you're going to be serious about building wealth, you need to own some real estate. I know people that they don't own a large primary home, but they own a ton of other real estate around the world. I know some people that have become extremely wealthy buying small pieces of land in other parts of the world, out in the rural areas, no one's paying attention to it. Then those cities start to grow. They're calling this person, hey, saw your name, you're owning this property, we want to buy it from you, and here you go. They paid a few $1,000s for a couple of acres, and here this city comes to pay them tens of thousands per acre. And I personally know some people that have done that. And I was like, where was I when they were doing this? Most of them were military people. They were in military, or those types of careers and jobs where they traveled. They traveled a lot. Merchant Marines. I know a gentleman that retired from the Merchant Marines, and he did that, worth almost $20 million now. And, he's doing very well. So when you're owning, those are the types of things that can happen. When you're renting, those things don't happen. You're just paying for where you stay. So that's one of them, the power of equity. The number 2 is you're saving money while building wealth, because when you're making mortgage payments, it's like a forced savings plan. Because you're depositing, you're putting the money into your home. Because every time you make the payment, you are increasing your equity. You're saving, which means you're saving money. So that's a big time. Also with the taxes, with the tax benefit, the tax benefits are big time savings. You do get to write off your mortgage interest, property taxes, and some closing costs that you pay can be a deductible, um, which reduces your taxable income. So those are the tax benefits. So you get in that tax benefits for savings plan, and taxes is one of the you have to watch your taxes if you're going to build wealth, because next to inflation, taxes come second, in my opinion, to whether or not you're going to be financially successful. If you, especially as you grow and get into a higher tax bracket. Um, the the third one is financial stability. Is financial stability is controlling your financial future, because you can actually, you can predict things much better. You can predict your finance. And case in point, in the most important one in this area is, you get, for instance, a 30-year mortgage, 30-year fixed rate, 15-year fixed rate, whichever one you choose. For the 15 or 30 or 20 years or whatever, they even go up to 40 now. Not a big fan of those unless you're investing. Maybe you're making the same payment. Just say it's $1,000. You're making the $1,000 payment for each month for the next 15, 20, 30 years. That's not the case with renting. Most landlords, they have to keep up with the market rates, which means you're going to see a rent increase every so often. So, case in point, I'm in the Charlotte market. I remember there were certain apartments, condominiums, downtown Charlotte. You could rent an apartment for $500. Here it is, $500 a month. And I know you're saying, whatever. Witnessed it, saw it myself. Those same apartments and condominiums are renting three upwards $3,500 a month. So just think about it. If in 1998 you were paying $500 a month, here it is, 2025, it's $3,500 a month. That's sort of self-explanatory. Look, that's the difference. If I would have went ahead and bought, I could be renting someone for $3,500, but I wouldn't be paying a $3,000 increase in rent in a place that I'm not owning, and I'm paying $3,000 more. That's a huge jump. Just think what you do, what you could have done with that money if you'd have just bought yourself. Or what if you would have bought and taken control of your payment back earlier, where it might have been $1,000, $1,500 a month. What you could do with the extra $2,000, you could be putting it somewhere else. So that's the way to think about it, because rents do increase. I don't know of any place, unless it was some, there's some parts of the United States, there's these passed down rent controls, things like that, what people are paying the same amount of rent that they were paying decades ago, things like that. That's few and far between. It's very few and far between, and they were what you call the lucky few. But other than that, you have to play the game. And I was talking about stories. That takes me into one of the stories. I met a gentleman. We were all living downtown, and he said, he had that. I just like the flexibility. I like to travel, this, that, and the other. And so he just decided to rent. And mine was, okay, well, you're in the building with us. Why don't you just buy it and rent it out when you're not here? Just rent it out. And you just do a month or however long you're going to be gone or whatever. And he was like, no, I just keep renting. Okay, 20 some years have passed. I hadn't seen him in a while. I bump into him, and he's like, yes, I'm still there. And he was like, I wish I would have taken your advice and just bought the place. He said, number one, the headache, they were constantly, the owners had changed ownership a couple of times, but he was able to stay there and rent. He was willing to pay the increase. And he was like, all of these times it switched hands, it could have just been in my hands. And like you said, you told me. So I'm like, he lost tens of thousands of dollars, like that, tens of thousands of dollars. And there's people that they're just happy to rent 20, 30, 40 years. And I'm like, do you not realize how much money you're losing by doing it that way? Because if you're going to stay anywhere over 7 years, you need to buy. You need to just be an owner in that market, because if you buy it, 7 years gives it enough time to do the appreciation thing. If there's going to be any market dips, it may dip and come back, things like that. If you're going to be there more than 7 years, that's one of the rule of thumbs. If you're going to be living somewhere 7 years, you found a stable company, a stable job, or a stable career to where you live, you can move from job to job. If something happens, you can get another job just as quickly. You're in those, in one of those sectors that's well known. For instance, here in Charlotte, healthcare, financial services, some of the most stable, stable industries. Technology definitely it's up there. There's no doubt about that. It's up there. But healthcare, financial services, it's, the Charlotte Metro is one of the larger, second largest financial hub in America behind Wall Street. Very healthcare system is booming here. I mean, it is growing by leaps and bounds. It's growing quicker than other parts of the United States because there's so many retirees moving here now. Florida is not the most desirable place anymore. North Carolina, this area, because of the mild, you get a little bit of each season, and people actually like that now, and everything's mild and have access to, some of the things that some of the benefits Florida offered. North Carolina can basically do it now, other than sales tax, things like that. But other than that, with the real estate prices, the weather, health, access to health care, some of the best health care in America, is hard to beat. So if you're in those sectors, you're going to be here. You should just own. You should just own, because you're going to win. I've used downtown Charlotte. I know I helped some people buy their first condominium, that one bedroom condominium, for $99,000, and now they can sell it. They're receiving offers for $1 million plus, and that's just being honest. Where else, and in a shorter period of time, where else are you going to turn? Unless you know what you're doing with the market, or you're an entrepreneur, where else can you turn, just by the sake of time and making your payments and just being there, going to work every day, doing everything, you can turn 99,000 into $1 million. There we go. That's something to really think about there. So that's why, in my opinion, homeownership financially is just one of the big wealth builders. And before I go, I mentioned one of the other benefits most people don't think of. Mental health wise, homeowners have fewer cases of mental health issues than renters and everyone else, just because they're not as stressed about moving constantly or rent increasing, those things, because where you live, it's going to be probably one of the largest payments that you make. And so those things can be stressful. If you're going into a rent increase, that means you're going to spend this money, put this money over here. You was planning to put it maybe over here in college, or retirement, whatever. You have to move it over here because of an increase in your rent, or you have to go through the stresses of moving, and moving is not cheap. You have a lot, there's costs to actually moving. And so psychologically, home ownership is very beneficial. It's beneficial to you psychologically, because where you're living, you're making the payments, you own it, you can do what you want to with it within zoning laws, things like that. But you can beautify it, you can whatever you want to do. You don't have to ask anyone, you don't have to answer to anyone. You get to do with the property what you choose to do. And that stability itself is very stress. It keeps you in a stress-free state of mind, knowing that you own your kids, they're playing in their yard, or whatever amenities you have. You just know that you're owning where you live, and that's stress free. A lot of people, that's why immigration is so huge. People wanted to come to America because of those things. They know they will have a chance to actually own, they can work and buy their home, things like that, and and give their kids a better future and have more stability in life. So that's the biggest one. That's the biggest one. You have those financial, then you have that psychological, that mental and psychological, the emotional benefits of it. Home ownership is hard to beat when it comes to wealth building. So I hope that I shared some tips and some advice that will at least get you thinking about it. If you don't own a home, it will at least get you more excited about becoming a homeowner, because now you know the benefits, some of the benefits. I mean, I just barely scratched the surface of the benefits of home ownership and financial success and wealth building. So if you have any questions, you want to talk more about home ownership, and getting prepared for it, getting financially fit to go into home ownership, my contact information is on the screen. Contact us. We'll sit down, put together that plan, put that home ownership into the plan. Before you know it, you'll be on that road to financial success and health and wellness. So that being said, tune in tomorrow. I'll be back at 10 a.m. YouTube, Facebook Live. Don't forget to share. Don't forget to like. Don't forget to subscribe. And until tomorrow, we'll talk.